Good morning, everyone. Welcome to trading for April the 7th. And we are just going to go through the disclaimer before we start. Please read this disclaimer about the presentation just being for educational purposes only. People that are in here have gone through the strategies behind the analysis. What I'm going to do here is just point you in a direction on key levels to be observing during your trading day. We did a couple of overkills yesterday with my issues with the initial recording, but all this is still in place, so we can still see that we are confined and waiting for a breakout on the euro. There it is, plain as day. We oscillate in that triangle. We're either going to break out and go up to 118.40, or we are going to come down to the 112 area. That'll all be decided. As we all know, I don't have to keep mentioning it about the issues that we are facing. There it is on the 4-hour set out for you. Let's just put this in, because then all these will come up every time that we are doing the. So this just gives you your levels. So remember, this is on the 4-hourly, still pretty range bound. What I can tell you this morning is that the markets have been rallying, and one thing I did forget to do was the data that's going to be released today. So you can see we have ADP employment change. These are usually all important, but I think the main news is obviously going to be what happens in the Middle East. So let's go back to the euro. Here we are. So we're coming into this first point that we identified yesterday, 115.85. Nice strong move in the last hour, and we get into a decision point now, 115.85. So as we drill down through the time frames, we'll see if there's a trade to be had. So let's go on to, whoops, beg your pardon. And so we can have a look and see what is going on here. So we can see as we come into the, let's go to the 5 minutes, it'll probably give us a better picture. So we've had a strong move up. We've come into this area. We'd identified, let's see where the trade was. So nice wave through the tunnel, bungees all going down to the bottom, all accumulating here. We obviously found the royal down here, and then we had a decision to make. So you had a 3-wave correction into the wave. This market then would have been, you would have had a fill the gap trade that you could have had a look at. It would have been messy and difficult to get into. This had sort of turned, this price action here might have tested your resilience to the trade, because your stop had to be below the low. But this was a better breakout trade here. In this area here. So let's go down to the 1 minute, and there it is. Where you've come back into the zone, you've got your tunnel, you've got your wave. Your wave is in a period of indecision, doesn't want to go higher, doesn't want to go lower, and this would have been your box for looking for entries in here. The better trade, you see, you get these spikes which then distort everything. Do you get that breakout trade? You probably would have got it with a breakout there. Your stop, remember, was below the low, so you were never in trouble, and off you go to the races. This is just, I was here when it happened. I was watching the thing, and obviously oil broke lower, indices ramped up, and that took pressure off the dollar, and so it gave a bounce to the dollar-based currencies. So now we can see it's very clear. So we've now got a range and into here, which will be pulling back into the wave. Remember what we talked about 45-degree angles. So there's a possibility that we could come back into the wave. With a strong move like this, I don't see a fill the gap trade. I would look for setups into the wave for a continuation and a continuation of the printing of this royal up here. The market is a little bit overstretched, so there's probably an opportunity for you to look at the market when it comes down to 115.60 area. Remember, I'm recording this at 5 a.m. New York time and 10 a.m. Portuguese time, and so just be aware of that when you do your analysis this morning. But that's a potential trade. Buying the dips, be mindful. Today is going to be full of comments, tweets, and news items. So you need to be just very, very mindful of that. So, but if you got the entry into a long down there, you can target these areas here. So I would put your target up at 16.25. So looking for trades around 15.40, target 16.25, get it to break even and ride the take the journey up. What we can see here is I always look at the chart for previous behavior. So when we have strong impulse like this, when we have a strong impulse like this, when we have a strong impulse like this. So these are showing you different examples of what happens with strong impulses. This was a continuation. You never really got, you might have got into something down here. In this area here, again on a breakout trade. Remember, this is an hourly, but you would have found something in the lower time frames, and then that would have been the first time that you would have looked at a trade for this would have been the first three-wave correction, and then the fill the gap trade, which exceeded that. And then what did that do? It came back into previous resistance, 61.8% retracement, and then there were potential setups in there. So if you missed that trade, there were opportunities to get into this. Obviously, the extent of these weren't as great, but you would have secured enough money to make your daily target. Now we're in that state of flux where we've had this. Are we going to get a corrective move back down to 15.50 and then go and test the highs again? You will see that when you do your analysis this morning. Right, so that's the euro. I'll go quickly today because we did quite detailed analysis just to freshen up everything this morning and make sure that we are getting everything that we need to be observing. So what did we have on sterling? Let's get rid of all this and let's get our wavy tunnel on there. Whoops, and there we go. So obviously this is not kept. Here's our target up here at 143.12. Let's put this in and hope it stays there for the rest of the analysis this week. We're having a corrective wave now. The wave has to decide whether we are going to come through, the wave is going to come through the tunnel, and we are going to test this, the the weekly tunnel and look for a possibility. I wouldn't be surprised if we came down into this 130 area and we went back to 138, because that looks like it's going to be the range, and then we could create a bit of a flat in that, and then looking for an extension. Remember, this is a daily up to 143, or if we broke below this low at 130, we would come back to 125. So that's broadly showing the wide range. On the 4 hourly, you can see you getting a bit of a flat. Again, you can see the strength and the weakness, the strength of the European currencies and the weakness of the dollar as people become a little bit more optimistic about the possible outcomes for peace. Let's drill down and see at the levels that we would be looking at for possible trades. So there's target, so 133.45 on the top side, and our low down here. So there's our range. We are currently at a decision point, and that is in here. And what are we going to do? Are we going to come back, retrace back into the tunnel? The wave will be starting to turn towards 45 degrees. The wave will possibly go through the tunnel, and we would then continue up looking for the Royal. And that would then initially be at that tunnel or that level there. Again, we don't know the volatility that would be attached to any positive outcomes. So now we can tidy that up and say, right, 132.50-ish, we need to make a decision. So let's go and have a look at that. So I can see now that the range is going to be 35.50 that we are going to be looking at. Why do I say that? It's because of that. So you've got the possibility of a fill the gap trade. You've got a move, swing high, swing low. What does that coincide with? So that is a very deep retracement. I would have thought that initially we would find some support in the 61.8% move down in this, which is a fill the gap trade that would possibly be looking forward to. Then we would see what we got here on the bungees, if they continue to roll over, if there's a snapback now and we repaint the Royal, or are we going to get the fill the gap trade, a correction back down in here, this will all roll over and we would come down to the bottom end of the bungee cycle. So on the downside, and then obviously we would be targeting this level up here, 133 area. So that would be our target up there. So any trade in here, look for the setup in as a fill the gap trade, see if there's merit in the trade, remembering that your stop loss is below 132.24. So be mindful of that on your risk tolerances when you are looking at possible setups. So that is sterling. I'm just going to look at the daily on the yen only because of the 160, and show you how this is just continuing to just meander at this level. There it is. You can see there's nothing to do on the yen. The only thing that you could do on the yen is, like we identified yesterday, if you play it through the cross, and that would give you a better opportunity. But I can see here that this is having to tell us what to do. So like the euro is boxed in, euro yen is boxed in. Are we going to break out above 184.60 and go and print a new Royal? or are we going to continue in this range, break lower, and come back and test the support area in this area here, which will coincide with the tunnel. So that decision has to be made. So that's the one that I would probably look at for taking a yen related trade. Let's have a look at the Canadian dollar. Again, I'm just going to whisk through these because we've got them set up. The ranges have been pretty narrow. The markets are waiting for some news. What have we got here? I can see we've got set up there. There's not much going on here. We can see the ranges over the last few days. So we are very tightly boxed in here, and we are looking for a breakout. So breakout above 39.50 and sustained support there. We're back to the highs at 140. Well, print a new high up at this level. The wave is trying to cross the tunnel, so we need to be now mindful of this area here and seeing what's going to happen, and then all that will play out. And let's have a look at the 4 hour, see if we can tidy this up a bit. Very, very congested up here. Nothing to see yet. On the hourly, you can see that this is the one we're looking at. So this was the primary, not the primary trade, I beg your pardon. That's the primary trade. And I will just do the target area, which I can see coincides with this big support area down here. So if we do break lower, if this does come down, 138.40 is a level you can watch in the Canadian dollar. And then what I'm going to do here is measure, and we'll just have a look and see what that coincides with as a retracement of that first move, which is between 38 and 50%, which after a very strong move is a very, very good area. So 138.40 now is a number for you on the Canadian dollar as a possible buy for a completion up at 140.50. Let's have a look and see what it says on there. We can see on here now, we've got 139.20, pull back into the fill the gap trade. You've got a strong area of resistance around 139.20. You've got decent support. So you've got 139, 139.20, and you're going to have to make a decision on where we go from there. So market at the moment is anticipating some sort of resolution for dollar weakness to continue and for these to get a little bit stronger. So bear that in mind and keep your eyes on all the tickers for anything that possibly could come out. Let's have a quick look at the Aussie. Consolidating, flaggy. Again, the outcome of this is going to be very dependent on what happens in the Middle East. So we can see the top end of the range is call it 74. We can see the bottom end of the range is 66. So that's a bit wide for us. Let's narrow it down. Here we can see that on the 4 hour we have this corrective wave that was in place because of the conflict and the strength in the dollar, and now we're at crossroads. So we've now refined it down to 69.75, 68.28, and those are your breakout levels. And there we can see it in there. So the market's got to talk to us now. So a continuation, and then if the market was to try and break up, this is going to be your first area of resistance, and you can see how that coincides with that over there. So let's call it 70. We can see very clearly on here that the support area and the congestion area is here. So 69.70 is what we are looking at. Let's try and tidy it up a little bit more. 69.70. Breakout this morning, so pullbacks into towards 69.20. There's a possibility of finding a trade. There we can see the breakout, and so we would be looking for a pullback, and that's great because all the levels that we like looking at on the Fibonacci is this whole big congestion area. So between 69.10 and 69.15, go hunting for a trade, for a continuation higher, for a move back to 69.60. All bets are off below 68.96. So that's what I would do in the Aussie. And then I'm now just going to have a quick look at the indices. This is on because it's futures, and I'll start with the Nasdaq, and you can see on the Nasdaq the strong rally that we've had this morning. The other things that I can see on here is that the market, regardless of the turmoil that we are experiencing, is showing a lot of resilience. So the first thing I want to do is just have a look and see how this would all map out. So we now at this 38.2% retracement area, which is 24,331 for those that can't see the number. So this is an area now where we need to be mindful. Are we going to extend to 24,800, 25,200 and up to 25? I don't know. The bungees are suggesting that there's going to be a continuation. We are going to stutter around this 24,400 area, and we might get a fill the gap trade and then look for the final move down and then into this 21,974 area. Again, dependent on what we are going to experience with the news that are coming out. So on the hourly, we can see we have got a resistance area at 24,452. So that's a number you need to jot down. And here I'm going to put on the other fib, which is that move from there to there. And let's get a target on this move here. And where's that target for this move up here, which moved up, which had a 50% retracement, and that target is and coincides with the retracement. So there's another number for you to be aware of, around 24,800 on the Nasdaq. I can see here we need to see what the momentum looks like, because you've got continuous divergence here. So be mindful of that. So this could be just people that are have got a lot of hedges on to the downside, taking profit on them, and the market is coming down. So go to the 5 minutes. But I think we've given you enough levels to be aware of this morning to see where the key levels are. So easily put, there's your low. So 24,154, 24,450 is opening range. We're starting to get a bit stretched. We started to pull away from the wave considerably. And looking to the left, I'm going to find previous highs here. So there's another number, 24,410. So 24,410, 24,450, possible areas of resistance. Again, if we have peace, resistance areas mean nothing. You would have to go to your higher time frame charts to find a more meaningful resistance. S&P should sing a similar song. Again, coming into the tunnel, as is the Nasdaq. Got a strong uptrend here, got a strong move up today, as is the case with everything. So I can see we've got, let's call it, we've got 66.60, I know the numbers, 67, and then after that 60, 68, 65-ish. So those are the numbers on the top side. On the downside, obviously 66, and then it would be about 66 and a half. Let's just drill down a little bit more. At the end of the day, you need the levels from your analysis. You are using the Wavy Tunnel template to guide you in what is going on with trends. This is a system that's been developed over so many years by Jody and her team, and it's wonderful to just give you more levels, more indicators to show you how momentum is weakening, where divergences are appearing, where you are in trend. What are you trying to do? You are just buying in these things. Looking for tops, very difficult because you're going to get burnt. You can see then, and then marking out your chart, and you can see the breakout level. There it is. Put a trade above there, boom, and off you go to the races. And then you know that this is your first impulse higher. So all things being equal, if you've got that point, you know that is wave one. You know you are looking for a retracement. The steeper this is, the less likely this is to come lower, usually in everything that I've always done. So the steeper this is, so this is another example where I mentioned earlier that everything's pulling away from the wave. It needs to come back. And there it came back down to the 50%. What did that coincide with? It coincided with previous areas of support and your breakout. And there it is. You look for your trade and off you go again. You complete with a break above that high. There it is. And now we're trying to break sustainably above that and push on a little bit more. So we will see in the coming hours whether that is going to continue. But you see how we've stretched away and we've moved away. This is going to turn up. The wave has never got through the tunnel. Here is your area of support on the 15 minutes. So you can put a box around here. So, and what you could do is you could see now, if you put Fibonacci on this one here, I'm cheating because it hasn't completed, but it's just to give you a level of the type of pullback. So this could be a deeper pullback, and my magic numbers, so 66, 25, 29, you need to watch that. And if we go into the 5 minute, you will see a little bit better. And there's the target we talked about, 66.80. So this is not a valid fib because that's not a complete move. So if I was to do a fib on this, in the way I do the analysis, it's that wave there, and you can see we've broken quite considerably higher above it. So the market, we're getting into overstretched territory, but you know, that means nothing if the market comes back to a piece in our time kind of scenario, and that would then give us, and so this is the catalyst. So now you can see that the oil price is coming into a level where it's got to make a decision. And there it is. And what we could do here is we could do this for those that trade oil or watch oil. This one we can put the fib in place. So oil could, everyone talks about the $100 mark, and you could see how it fought with it before. So obviously this is an area which would then coincide with a 50% or 61.8% retracement. So these are your levels on oil. We know what the top side is. It's 120. But we've got a target up here. If we don't break below 85, then the market is going to continue higher to 125. So those are your levels in the oil. So that's the run through that I've done for you this morning. I hope that was helpful. Should be in your inbox when you start. See you soon. Bye bye.